Welcome back. De Beers and Mountain Province recently paused diamond mining in a Canadian mine, reflecting a bit of a slowdown in demand. The market also sees more preference for lab-grown diamonds over mined diamonds. So to go over all of this, we're going to bring in Paul Zimnisky, global diamond industry analyst at Paul Zimnisky Diamond Analytics, to talk about these latest trends. It's good to have you join us. Thanks so much.
Hi, Lindsay.
Let's talk first of all about the pause on mining. I'm wondering, what does this say to you about the diamond mining industry?
You know what, I think with the Canadian mines in particular, this has been a trend we've been seeing for 2-3 years. So there's 3 world-class mines in northern Canada. And, next year, none of them, there's a chance that none of them will be in production if, industry fundamentals don't improve. So we're seeing it across the industry. I mean, we're through a multi-year stretch of pressure on diamond prices. The industry's been hit with everything from sanctions on Russia to the 50% U.S. tariff on India, to the luxury recession in China, and then kind of in the background, there's kind of been this secular trend of the emergence of mainstream man-made or lab-grown diamonds. So the industry is dealing with a lot, and it's been a tough stretch.
Okay, that was going to be my next question. Like, what's the reason for this? So it's not just one factor here; it's a couple of different factors that you just mentioned.
Yeah, and typically when the industry kind of goes through a downturn or a lull, it tends to recover, quite rapidly. Typically there'll be like a catalyst, like we saw, in 2008, 2009. Again, in 2015 and 2020, we had, another downturn, but it was a relatively rapid recovery, and we just haven't seen that this time. And I think that's what's, causing the concern. But they always, you always say it's darkest before dawn, and that might be the case now. It's starting to really feel dire, but there are some, positive catalysts on the horizon. So
what are some of those
positive
catalysts?
Yeah. So the trade deal with the U.S. and India is key. Almost all diamonds are cut and polished in India, and once they're, quote unquote, transformed in India, they're considered a product that originates in India. So the 50% tariff is huge, and we saw a resolution. We saw a trade deal with the U.S. and India last week, and there's an annex on natural diamonds in particular. So we're going to probably see an exclusion on the importation of natural diamonds coming into the U.S., and the U.S. is 60% of global demand for diamonds. So that's a huge catalyst. De Beers is up for sale at the moment, so that's been causing some uncertainty throughout the industry, but I think we will get some clarity on who the new owner will be, and I think that will maybe provide a platform, and some positive momentum could flow from there. So there are some positive catalysts happening in 2026.
Just to clarify, when you say natural diamonds, you mean mined diamonds?
Correct, yes.
Okay. Let's talk a little bit about lab-grown diamonds. Like, can you discuss the value of lab-grown diamonds in comparison with natural diamonds or mined diamonds, and where that demand is coming from? Is it increasing as well?
Yeah, so just to be clear, these are human manufactured diamonds. They're made in a machine. They have the same physical property as a natural diamond, but there's really no rarity component. You could actually make them rather inexpensively. And the price has come down significantly over the last 5 years. For instance, a decent quality 1-carat natural diamond will, say, set you back $5,000, but you could find a similar quality lab-grown diamond for just a few $100s. And, CBC actually did a piece on this a couple of weeks ago on their marketplace show, where they bought a 1-carat lab-grown diamond on Alibaba for $230. So I think it kind of shows how inexpensive they've become.
Why is the demand growing then? Because I know people have worried in the past about, diamonds that are mined, being unethical, and there's some unethical human rights around some mining around the world. Is that part of the reason?
I don't really think so, even though that's kind of one of the big narratives. And the reason I say that is because, 10 years ago, we did have lab-grown man-made diamonds, but they were the same price as natural diamonds, and there really wasn't any demand for it. The demand really started to pick up. I would say it almost directly correlates with the price coming down. So I think it's all about the price. I think the question now becomes, will they become, so inexpensive that consumers don't see it as substitutable? So I think that is something that's playing out in the market. Whether that's going to take another year, another 5 years, it's unclear. But I think with engagement ring and bridal diamonds, I think most people prefer a natural diamond. It's just a question of, how much are you willing to spend?
Right. When it comes to what companies are doing it right in terms of price point, quality as well, what companies do you think are doing it right?
As far as retailers, you mean, or mining companies?
Either. If there's any companies you like that come to mind.
Yeah, so the industry is actually very fragmented. In North America, we probably have 25,000 independent jewelers, and they kind of each have their own business plan. I think if we're talking the highest end jewelers, like the luxury houses like the Cartier, the Tiffany, the Van Cleef, they only sell natural diamonds. I think the companies that are kind of picking a lane and sticking with it are going to be better off longer term. I do think there could be some problems if you were selling a customer a lab grown diamond and they weren't exactly sure what it was, and they kind of learned that the price has, fallen quite precipitously since they bought it. I think that could create an issue. So I think, just being, very clear, with your customer, what it is and the value proposition and making sure they understand that. I think longer term, those are the companies that will do best. And,
a buyer as well might want to have a little bit of information when they're going in too. I mean, what should buyers be looking for when it comes to a good price point for a diamond, whether it's lab grown or mined?
Yeah, I mean, with the internet and now with AI, we have so much information at our fingertips. I think some of these AI shopping agents are really impressive what they could do. So what I would say is with natural diamonds, the price is pretty mature at this point. The prices are pretty consistent. With the lab-grown diamond, it's still like the Wild West. Again, you can find a lab-grown diamond that's basically the same diamond, same characteristics for a few $100s or a few $1,000s. So the price is really wide there. So definitely do your homework. Just because one is significantly less expensive, it doesn't mean that it's not the same thing. So you do want to do your work, and you want to buy from someone reputable that you trust. And if you're buying a higher end natural diamond, you definitely want to make sure it has some sort of grading report. So the GIA is the biggest in the world. That's based in California. I consider them probably the most reputable lab. So you do want to you want to be careful.
Okay, we're going to have to leave it there, but some really good information. Paul Zimnisky, appreciate your time today. Thanks so much for joining us.
Thanks.
Coming up, Boston Pizza reported earnings this morning. We will talk to the CEO.